US stocks have not only erased the 2025 losses, but they're now just a 4% leap away from hitting record all-time high territory. And this will probably happen soon. Investors, option markets, and $1 trillion investment by the Saudis and Trump himself all are supporting this risk-on bullish narrative. My name is Jessica Amir, a market strategist here with Muma. It's great to have your company this 14th day of May. Welcome to the Daily. So markets will probably soon break and pierce into new blue sky territory. Overnight, we saw, I guess, the market gods blow away the old storm clouds that were hanging over markets, and we saw several factors now supporting this very bullish risk-on narrative. Firstly, we saw US inflation falling more than expected. We saw tariff and trade war tension continue to ease. And thirdly, we saw big tech stocks get a huge investment, $1 billion or rather $1 trillion investment from Saudi Arabia. So the risk-on narrative is definitely here. As for markets, the Aussie share market is now up 13% from its low. We're just 3.3% away from being back at a record here in Australia. Other markets are also doing really well. Think about Hong Kong's Hang Seng. Even though you'd think that that would be hampered by tariffs, their market in Asia is actually up 19% from its low. It's almost in a bull market. Remember, a bull market is a run-up of 20%. So the Hong Kong Hang Seng has just got 7% more steam to run, then it'll be back at its record all-time high. But the risk on running hot sentiment is there for tech stocks the most. Investors are continuing, I guess, over the past 2 weeks to rotate out of defensives, particularly those healthcare and staple names, and they're diving into tech in a very big way. Now, this is exactly why the NASDAQ 100 surged 1.4% overnight, led by Nvidia and Tesla. Also fascinating to point out, despite some skeptics, the NASDAQ 100 has now, it's well indeed in a bull market. It's in a even more so in a bull market. It's almost up 30% from that low that we hit back in April. It's up 26%. So as we can see from the line on the screen, stocks have now erased what they previously lost earlier this year. But remember, markets don't go up in a straight line. As much as stocks can keep on going up, they can see some profit taking and can see some down days. Although the narrative, yes, sure, for stocks is very bullish over the long term, I just would encourage you to consider what some investors and traders will be doing, and they'll probably be taking some profits off the table, as in trimming their wins. Remember, stocks have gained considerably, as we just said. Stocks are up 30% somewhat from those lows. So it'd be very natural to see some profit taking maybe over the next couple of days before stocks continue to rebound to new highs. Speaking about new record all-time highs, what about Nvidia? Haven't we seen an outstanding performance for Nvidia? It's back above the $3 trillion market cap club, running closely behind Apple. Thanks very much. So Nvidia, they gained 5.6% overnight. They've now gained, their stocks now gained almost 40% from the April low. Apple has gained 23% in the same time. Now, if this pace and this rally continues for Nvidia, obviously you would expect Nvidia to overtake Apple and become the second biggest company in the world. How much does it need to gain, Jess, though, to become the second biggest company in the world? Well, I'm glad you asked. I'll tell you. It only needs to gain $11 billion in value, and then it will become the second biggest company in the world and closely be tapping on Microsoft's shoulders to claim the #1 spot as the world's biggest company. Now, why would this happen? Why am I saying this now? Well, many reasons. I just want you to bear with me. Number one, the US, as we said, is weighing a deal to allow previously induced Biden restrictions to essentially be died off. Now, secondly, what happened overnight, again, supporting this very bullish narrative for US chip stocks, Nvidia in particular, is that the US is also weighing up a deal to allow the UAE to import more than 1 million Nvidia chips, while other major S&P 500 tech companies have also been reaffirming that they are still buying more Nvidia's GPUs than ever before. This is in the face of tariffs. So I just want you to keep your eye on Nvidia, and indeed leveraged Nvidia ETFs that are up considerably, because Nvidia is looking like it really wants to become the world's biggest company in a matter of time. Now, the risk-on market is spreading to other markets as well. Indeed, the blue sky narrative is also there for currency markets. Now, this is why the US dollar is falling and allowing commodities to move on up. And gold is doing particularly well again, allowing bargain hunters to essentially buy the dip. I guess bets are still on that gold will continue to surge to a new high. And the reason for this is because tariffs on China, they're still restrictive at 30%, while global and US demand is continuing to explode. Particularly in the face of high debt levels. And this is another reason why the narrative is there that's bullish for gold. Speaking about other commodity markets now, the oil price has continued to rally up. Brent crude rose 2.5% overnight. It's now back at, wait for it, $66 US a barrel. Now, bets are on for oil to get to $95 a barrel. Now, that's in late July. It might seem a little sky high, but we are seeing some restrictions come into place that maybe suggest this narrative should be on your radar. Now, what are some oil stocks to watch? Well, here's one. It's the 13th biggest oil company in the world. It's Australia's biggest oil company, and it's, of course, Woodside Petroleum. It's now gained 13% from the April 7 low. Now, Woodside shares, interestingly, if you're not a technical strategist or a technical analyst, I just want you to bear with me here. Woodside shares flagged a technical indicator suggesting that their rally could continue. Basically, remember that a company's shares rally on the back of an expectation of higher earnings. Obviously, with the oil price being up 7% in 5 days, there's more blue sky for Woodside's earnings. Hello. Let's insert the concept that revenue is now expected to pick up. Remember last year, Woodside's net income rose in double digits, high double digits. Their net income margin actually rose 23% to $2.9 billion US dollars. So that's why they were able to actually pay one of the best dividends in Australia. Last year, they paid a almost 12.13% gross dividend yield. And that's why some Aussies think that this is still one of the best dividend payers. What about today? Well, the futures earlier weren't giving much away, only suggesting a very slight lift, but all eyes, of course, today and perhaps for the rest of the week and for some weeks to come, perhaps not months, will be on AI benefactors, perhaps data centers as well. So keep an eye on everything tech down under, such as NextDC, Megaport, Technology One, and Wise Tech Global, of course, because the bullish narrative is now thickening for tech stocks to continue to rally up. Last but not least, I want you to consider defense and airline stocks. A couple reasons here. A major investment is headed for these sectors. Not only is the US talking about increasing defense spending to $1 trillion, but overnight we saw several major things take shape. Number one, Saudi Arabia ordered 30 Boeing 737 MAX jets. Another thing to consider is China lifted its ban on Boeing aircrafts. So, hello, let's talk about Qantas, the flying kangaroo. Down under, their shares are doing exceptionally well. They're back above $10.07. Hallelujah, nearing a record all-time high. Hallelujah is what shareholders are saying, or perhaps traders who bought the dip, because as we can see, their shares have been roaring higher. They're up almost 30% from that April 7 low. That was the day the entire market crumbled to that new low. Also, keep an eye on other ETFs, I guess, in the same vein that we're talking about defense, we're also talking about airlines. Watch the world's biggest defense and airline ETF. It goes by the ticker of ITA. Now, I want you to be watching this because it's punched a brand new record all-time high overnight. It's up 27% as well from its low. But of course, the US, as we just said, is expected to potentially pass an increase in defense spending to $1 trillion. There's so much to consider today, isn't there? It's great to have your company. For more information on stocks and ETFs that we've covered today, head over to Memory's platform and don't forget to tune into our podcast if you are watching this via YouTube. Thanks for your company.